Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, and what a couple weeks it's been. Really, what a summer it's been, and as we're ending the summer here, kind of wondering if we get a little continuation of this rise in the precious metals.
Sure does look like it. Gold's pushing up above 1550 today. Has a little five-wave pattern that it looks like it may complete about 1570, but I wouldn't be surprised if it just keeps going up. Everything, I think, hinges on the stock market. The stock market's been in this range, and the S&P is pushing up today, Wednesday, as we're recording, pushing up to the 2940 level. And if it breaks out to the north, I think safe havens would sell off. So we're really watching the stock market, like we said last week, watching it closely to see which way it wants to break out of this range.
Sure. We pointed out that range on last week's chart, especially if you take that December fall out that we had last year, that almost 20% drop. So we're sitting right in the middle of that range, have to see what the stock market does. But it is interesting that the stock market is continuing to rise while gold, silver, and platinum are on this tear. So I wonder what else is in the works. I mean, we're looking at gold up about 23% just since May, so the beginning of the summer. And at that time, that's when we saw a peak on the 4-hour charts, RSI. And since then, we've had months of divergence pushing down against RSI. Now, we made that first push up past the old-time highs. We got into the mid-1400s, and that actually was our peak on RSI for the daily.
Right.
So we've had a 4-hour peak with multiple declining highs on the relative strength index. Now we've had a daily chart peak and shown our first RSI divergence there. So I like your 5 waves. I'd also argue on a bigger scale, we could be seeing the completion of an Elliott 3 waves drive, which I think would push us up into the high 15, low 16 range, right around the top end of that last little bump, that last little attempt we had back in 2013 to keep the bull market going. And that could be our short-term stopping point. So the question is, where's the top? Somewhere in the next $50, $75, I would argue. And then ultimately, when we do have a bit of a correction, how deep do we get to go?
Yep, all of those are still pending questions that we'll attempt to answer in the next few weeks while the markets play out. What we'll stress is that we've clearly turned a corner with gold, and this has been the first phase of, I think, a cyclical bull market for gold. Gold is headed much higher, but we're going to be looking at buying on weakness, any weakness, and again, that looming question of when we get weakness, how far down does it pull? This first phase has been smarter money, institutional money that has come into it, kind of while gold was quietly building this base that it's been building in the last 3.5 years. And so this first phase is going to draw people's attention to gold. There have been more people calling about gold. It's definitely been more in the headlines as the safe havens have rallied.
Well, and the markets are following that. When you look at the COT report last week, I mean, gold in the managed money category is now sitting at 8-to-1 long contracts to short, something like 260,000 long contracts to 30,000 short. So the whole market is expecting an uptick and continuation of this bull market in gold. My big fear is if you sit around waiting for pullbacks long enough, eventually the price is $500 or $1,000 higher. So it's the same thing for clients who may have been looking to take profits in 2012, 2013, and then all of a sudden gold's down in the $1,300, $1,400 range. What if you end up seeing the same thing on the other side? I mean, what if it's 5 years before we get back down to these prices after we've gone up to $3,000 or $3,500? So if you don't have a foundational gold position. Now, when we talk about charting, we're obviously talking about maximizing entry and exits and looking for ratio trading opportunities. But the reality is, if you're sitting on the sidelines with zero position right now, and you only care about $100 up or down, you're looking at the market for the wrong reasons.
Indeed. So if you don't have a foundational position, you were saying?
Right. If you haven't established any type of foundational position in metals, you certainly should. And any of us here at our office are happy to help you with that. Where does precious metals fit into your account? Now, that's when we bring in our strategies like ratio trading. And for parts of that position, you do want to be to some extent price sensitive because you want to maximize your returns as best as possible. But ultimately, if we're talking about a bigger crisis here, interest rates at 0 or negative, banking concerns, cash concerns, having zero gold trying to pick up an extra $100 is definitely not the way to go right now.
So if gold pushes higher, like we're talking about here, short term, $50, $75, that puts silver above 20. And the last high on silver was 21 and change. So silver's going to be pushing a little higher here too before we potentially see possibly the buying opportunity that we're looking for.
Yeah, I've been saying all year, I don't really care about silver till it hits 20, at least from a charting perspective. But the reality is we're up like 35%, in fact, 37% since May. So take that with the grain of salt it deserves. But we are coming up on that 20. This move up to about 20 and a quarter to 21, which puts us in that top end range, like Robert mentioned. And just like gold, if we have some type of correction at that point, there's some levels here on the chart I'll point out as an opportunity. So I think it's worth pointing out, though, we talk about the ratios with gold being up 23%, silver up 37%. Guess which direction that ratio is going?
Down. It's broken below 80, I see, on gold-silver ratio.
And if you kind of look at the charts overlaid on each other, realistically, if silver is going to be testing the same prices in its history that gold is testing now, we're looking at $27, $28 silver to look at the same pricing range from previous years. So silver,
like a 6-year high or something like that.
Yeah, exactly. And silver has a ways to go. So I'm still very aggressively encouraging silver, even though we're now sub 80 on the ratio. I still think it's a push.
Moving to platinum. Platinum has had one heck of a move here in the last couple of weeks. When we said buy it 2 weeks ago, it was sitting around $850, $860. Now it's pushing toward 1,000. So I like our call from a couple of weeks ago. I'd like another opportunity to get into platinum lower, but the platinum gold ratio is still telling you platinum is severely undervalued at about 35% below the price of gold. So it has some catching up to do, and it's not surprising to see platinum continuing higher here.
Right, and I think platinum is still that sleeping giant. Even with silver moving pretty aggressively right now, which isn't surprising. It's the direction people go when they start moving to the market and say, holy smokes, gold costs what? What can I do that's cheaper? But for those of you looking to maximize your portfolio, adding in a platinum position, realistically, if you extrapolate out platinum's history, just like we did with silver a second ago, platinum would have to be around 1,100 today just to match where silver has already gone to, and 1,400 to match where gold has already gone to. So platinum is a long way to go, and when it plays catch up, you're going to want to have been participating.
Jumping to King Dollar, we have the dollar index, which peaked right around 99 and has been falling. It looks like it may be headed to around 95, 95 and a half. So you have the currency pairs with the dollar weakening against some of these other currencies like the euro, the yen probably.
So as the markets remain in their range, we do want to remember that we are moving into the fall season. So while summer vacation spending is ending out on the East Coast, and as a lot of people are aware this week, we will have some weather spending starting to take place with the hurricane season starting to kick off. So that can and generally is at least a short-term boost for markets, followed by obviously holiday spending in a couple months. Now, with that being said, the dollar continuing to climb with an expectation of possibly one more rate cut this year. So we'll have to see how the dollar responds. If interest rates are coming down and going to continue coming down, the only thing that's pushing that dollar up is just even worse options overseas, in the euro, in the British pound, in the Chinese renminbi, Japanese yen. We're just the life raft with the least amount of holes in it. And that's why we're seeing the precious metals and other commodities doing exceptionally well.
That does it this week for Gold and Roll Radio. Thank you for listening. You can follow us on Twitter at ICA Gold. Like us on Facebook at McIlvaney Financial. Click the button below to subscribe. You can find all of our information at McIlvaney.com or call us at 800-525-9556. Thanks for listening. Have a good week.